So joining us virtually to talk about horizon scanning is Professor Claudia Buch, Chair of the Supervisory Board of the ECB. So Professor Buch was the Vice President of the Bundesbank, President of the Halle Institute for Economic Research, Professor of Economics at the Universities of Magdeburg and Tübingen, and a member of the German Council of Economic Experts. Professor Buch, the floor is yours.
Thank you very much, Henry, and good afternoon to the whole audience. I really need to apologize that I can't be in Basel today, but I had a visit to the Central Bank of Ireland scheduled a while ago, and this is where I am now. So the background that you see, this is an island, and I'm really happy to speak to you. I saw it's a very impressive program that you're going through, because the main theme of my talk will be how do we respond with good infrastructure building to the challenges that lie ahead for regulation, supervision, and the questions that are currently being asked about the adequacy of the post-financial crisis regulatory framework that we've put into place. So maybe just going a little bit back in history. So it was 17 years ago, roughly, when the global financial crisis struck, and we've done a lot collectively in the policy community, the supervisory community, to do institution building in terms of regulation, but in Europe also in terms of creating the banking union. So this is clearly something that has changed in the past 17 years. There's been a lot of digital innovation, and basically the conference here bears testimony to this. Lots of things changing in the financial sector, positive developments, but also, of course, more competition. And there's many emerging risks, so that I would say is the last element of the changing landscape in which banks and other financial institutions operate. And of course, we all agree that maintaining financial stability, what has been achieved since the crisis, that is really key. At the same time, the achievements of the post-crisis reform agenda are often being questioned. And I think our response should be, yes, to take also the questions that are being raised seriously, to become more efficient, more effective, more risk-based, but clearly no in terms of softening of standards, weakening resilience. I think this would really not be learning the lessons that we have from history, even further down, even further back in time. We all know the book by Reinhardt and Rogoff, This Time is Different. Typically, it's not different. So we tend to underestimate the vulnerabilities that build up in the system, and I think they're all still with us. So if we could go to the next slide, I could show you what I have in mind, what I would like to talk about in this next 20 minutes in terms of what we can do to respond to those that say we've gone too far, we're too intrusive with regard to supervision, with regard to regulation. I think our response as also technocratic institutions, central banks, should be to provide the best evidence. And the best evidence needs to take into account what has changed in the meantime. So basically what I'm talking about is something which you could call a policy cycle, evidence-based policy making, and I just roughly sketch it on this slide here. So it's basically starts from defining the broad policy objective. So for the post-crisis financial sector reforms, this is to make the sector more resilient, to reduce the probability and severity of financial crisis. Then we need to, of course, operationalize this like in monetary policy with some intermediate indicators. And then we need to define policy measures that can tilt the balance to get us closer to the policy objectives. And these are the post-crisis financial sector reforms. And then in the end, we need to evaluate what we have done, and we need to take confounding factors into account. So, for example, when we talk about resilience, we clearly have to acknowledge that over the past years, the shocks that have hit the real economy and the financial system have also been buffered by fiscal policy to a large extent. So we need to take this into account when assessing the evidence of the effects of the reforms. And any potential future changes of regulation should clearly also follow this evidence-based policy cycle. But all this requires a good infrastructure. So this just doesn't happen on itself. And I think here also the BIS has a key role to play to contribute to further building this infrastructure. So let's go to the next slide, and I explain a bit more what I mean with infrastructure. And then I will go into the elements of this slide. So the first is evaluation framework. So basically implementing this policy cycle that I've been talking about. Second, we need good repositories of all the studies that are there, that are conducted inside public sector institutions, but also by academia. We need to conduct meta-analysis. Third, we need good data centers and common data documentation, and seeing the program that you've gone through and that you're discussing. I don't need to bring this message to this audience. And clearly also we need to promote and harness innovation. And finally, a final element of this infrastructure is also network building communication. So that's why it's also good to have this conference here. So, and the good news is all the elements of this infrastructure are there, but we still need to do more to really develop it and to use all these elements very actively. So let me describe on the next slide what is there and also what is the very important role that the BIS is playing. So first, evaluation frameworks. We need them to manage this policy process that I've been describing, to make sure that, for example, very practically, we have the data that we need in order to evaluate, to go through this policy cycle, that we have this data also readily available. That's reducing a lot the cost of policy evaluations. And policy evaluation, these frameworks also mean that we do outreach to external stakeholders who have interesting evidence to bring to the table in terms of effects of reforms, but also potential unintended effects of reforms. And this is essentially what the FSB framework for the evaluation of post-crisis financial sector reforms is doing, and I would say something about this in a minute. And also the BIS, the Basel Committee on Banking Supervision, of course, has a very clear evaluation agenda, evidence-based agenda, as the chair of the committee has recently also mentioned in a speech. So just to give an example, the FSB has done evaluations of post-financial crisis reforms, lending to SMEs, infrastructure finance, too big to fail policy, central clearing. And without, of course, doing justice to all the richness of these evaluations, they basically show that the benefits of the reforms outweigh potential unintended side effects. And we also know from a lot of work on the capital related reforms that stricter capital requirements do not constrain lending or growth. And this is also the result from a lot of these studies. And we need, as I said, to use them further to also address new issues that are arising. The second element of this infrastructure is that's on the next slide, all the evidence that is there that I've just sketched needs to be brought together. Of course, we can't just take one study and derive policy implications, but we need to look at the richness of evidence that is there. And this is basically what repositories can do. And there's a very concrete example here, which is FRAME, the Financial Regulation Assessment and Meta exercise, which is hosted by the BIS. It's a little bit similar to, I also put this example of the Cochrane Foundation, which is a repository of impact assessments in the field of medicine, so very different from what we typically deal with. But the idea is very similar, to bring all the evidence together, to make it easily accessible, searchable, to make sure that we base our evidence on our decision-making on the best available evidence. Why is this related to the BIS Innovation Conference? Well, because we can do a lot with AI tools to reduce the cost of putting together repositories, to do meta-analysis. I think there's a lot, and we have also tools developed within the ECB supervision to make this possible, to use AI tools for this purpose. For the sake of time, let me not go into the very details of the two additional initiatives that I have on the slide here. One is the International Banking Research Network, which is also a way to bring together analysts, researchers from central banks, from international organizations, to work together to create more evidence that then also can be brought into repositories, and to basically conduct similar types of empirical studies across a large set of countries, and then share the codes, compare the results, but overcome the problem that very often we cannot share the underlying microdata that we need to do very careful impact assessments on, for example, how shocks are affecting internationally active banks. So this network, under the great leadership of Linda Goldberg, who's I think also somewhere in the audience, has been around for more than 10 years now, and I think it's a very useful example of how collaboration can be used to enhance our common knowledge. The Network for the Greening the Financial System is, of course, another very important example. All this, and this is on the next slide, is, of course, relying on good data inputs into the analytical work. And as I said, the International Banking Research Network, to give this example, was founded as a way to overcome the problem that microdata that is needed for good policy evaluation can typically not be shared across countries or across institutions because of data confidentiality restrictions. At the same time, I think a lot has happened in the policy world with public sector institutions, central banks, to make data, microdata, accessible to external researchers. So this is happening within central banks, and also the BIS is contributing to this. And there's one network called Innexta, which is basically the granular data network. So all these providers of granular data coming together, exchanging experience, and how then data access can be made feasible. And for everybody who's worked in this field knows that how important it is to document data carefully, to have data dictionaries, to also manage access rights to microdata. And this is where, again, digital tools, subtech tools, so digital tools that are developed within supervision can help tremendously. So what we have, to give an example, in the ECB is Agora, which is a data lake, which is making supervisory data accessible to supervisors across the system. Of course, again, managing access rights very carefully, but making sure that the decisions we take are based on the best available data, and that we share whatever is feasible. A related project is Athena, which is a platform for managing and searching the data, also using large language models. And I should say that we're also very happy to share our experience here, and I'm sure some of the colleagues are also in the room, that we're very happy to share our experience with other institutions. And of course, to the extent that there's anything that's public, based on public data, we're also planning to make evidence available publicly. Of course, everything we do in supervision is also very subject to very strict data confidentiality arrangements. But whatever we can do, whatever we can share, we will also make it available. Let me mention a small initial project also of the ECB. So that's a pilot project for research, to give researchers access to confidential statistical data. You see this here as well. This is in collaboration with other central banks. So using the research data infrastructure in central banks, we also plan to make more data available in order for others to use this information. And I've mentioned already, and we can go to the next slide. I've mentioned already that all of this, putting depositories together, making data available, making the information that we have easily searchable, bringing people together. Of course, these elements of this infrastructure are already there, and we can use them in a much better way and also build on these elements by using and promoting innovation. So we make very good experiences with internal in the ECB, but also again in the spirit of sharing our expertise with other institutions, with AI tools that allow us to better model our data and to enhance evidence-based policy making. And I think in particular at the current juncture, this is important because we're dealing with an environment, as I've said at the beginning, where a lot of parameters are changing, where there's digitalization, new markets opening up, new competitors entering the market, and we need to understand what this means for the core financial system. At the same time, we have many structural breaks. So with emerging geopolitical risks, with changing also international institutional frameworks. We need to understand how this is affecting financial stability, the soundness of financial institutions. So when I'm saying we need to use and exploit innovation and the digitalization infrastructure, this is not an end in and of itself, but it's really there to also promote our understanding of what are the risks, what are the fragilities in the financial system. And again, as I've said, the BIS Innovation Hub can play a very important role in facilitating and sharing innovative solutions. Let me again quickly mention two tools that we are using. One is called Navi, and it's already a little bit in the name that it's about navigating us through the complexities of financial markets. We know that financial markets are very interlinked. We have actors on financial markets that have very complex organizational structures globally. So Navi is basically a tool to do network analysis and to also visualize financial system interlinkages. Another tool is called Gabi, a German first name. It's an acronym for actually something very, very interesting, which is the optimization of regression models, stress testing. So basically using AI tools to optimize the way we conduct our analysis of financial stability risks. And here I also see great potential for collaboration with externals, with researchers who are struggling basically with the same problems as we do in terms of how to best model the system, the financial system, and the interlinkages and the new structure of the system. And let's go to the next slide. And this already says how important it is that we develop these elements of the infrastructure by closely collaborating with researchers, with analysts, with academia outside of the supervisory/central banking world. So what the phenomenon that we often have, and I'm simplifying here, of course, a little bit, is that often the policy world is sometimes very, very quick. We sometimes don't have the time and also the resources to really do very refined analytical studies. We have a lot of evidence, we have a lot of information, we see a lot of questions, but often there's not the capacity to go into the detail that is needed to do good analytical work. The research community, on the other hand, has maybe more time and also the skills and the analytical tools to do the analysis that is needed to understand financial stability risks in the new environment, but then it's often difficult to really focus on the policy relevant issues, not because of a lack of interest, but because sometimes actually policy relevant work is not fully appreciated, let me say it this way, also in the academic process, the refereeing process. And there's one specific issue that I would like to mention here. In order to have good evidence on which to base policy decisions, supervisory decisions, we need a lot of replication studies, also to update the repositories that I've just been talking about. But replication studies are often not really rewarded in the academic field. So I think it's really important that we work together, that we try to understand how to bridge this gap, and we're certainly we have a lot of initiatives, probably not enough yet, to bring policymakers/supervisors and academia together. Just two examples here. One is a doctor network on digital finance that we are supporting. So we will have also doctorate students coming to the ECB, working with us on developing these digital tools. And the second initiative that I would like to mention here is our annual ECB Banking Supervision Research Conference later this year, where we'll also talk in more detail how we want to further develop our networking, our exchange also with the academic community. And of course, I've mentioned the access to microdata that many central banks and also now increasingly the ECB is facilitating. So I come to the last slide, just 1 minute left, and I can be very quick here. So yes, we live in very challenging times. So the risk environment has changed. The financial sector is becoming more digitalized. The success, the benefits of the post-crisis reform agenda, which is clearly there. The evidence speaks a very clear language here is still often being questioned. I think the best response that we have is to really improve the elements that we have for a 21st century infrastructure to facilitate evidence-based policy, data-driven supervision. So I think this is what we can contribute, and where I hope I've given you some ideas of how this can be done, and I hope that we can also in the future collaborate on these initiatives. I don't read them out, you've seen the slide before, so I just leave it there. So thanks a lot again to the organizers. Thanks for listening, and I hope that we will stay in touch and maybe next time see you in person. Thanks a lot.